BlackRock out with its 2024 outlook, recommending investors seize opportunities within the changing environment. Here's the quote from them. The new regime of greater macro and market volatility has resulted in a dispersion of returns. We believe an active approach to managing portfolios will carry greater rewards. A sea change from the one-and-done asset allocations that worked so well during the Great Moderation. That period is over, and it's time to seize opportunities the new regime has to offer. BlackRock's Wei Li joins us right now. Wei, let's talk about that new regime, that title, grabbing the wheel. Wei Li, what's changed?
Well, as we look ahead to 2024, as we think about outlook, context is everything. So earlier on, I heard multiple references to lending, and if you look at the economic activities more recently, compared to a normal expansion, it feels like a strong expansion. But if we zoom out, actually, we're still at pre-pandemic levels. So nothing is flying. There is no landing. We're just climbing out of a hole, and ultimately, what this means is that we don't need a recession as a result of that. But the bigger point is really that we're now in a different macro environment, an environment where we do want to put money to work, and it's even more important to do that. But the reward for being active is greater, for being selective is greater, which is how we're thinking about implementing the themes for 2024.
A part of your approach is to harness mega forces. There's 5 of them, 5 themes, I believe. One is AI. Of those forces, Wei Li, do you think the focus is going to be on things here in the United States? Does that dominance around that tech story continue?
We currently still have a overweight in the DM, tech and AI megaforce, which has been a long-held overweight in our portfolio. As we think about opportunities in this particular megaforce, we have to think about the multiple stacks where AI can have an impact. You start from the semis and the chips to the foundational model, the data center infrastructure, as well as all the way to the third kind of stack around applications. So far, if we look at the performance of the Magnificent Seven, they almost doubled. So clearly this theme has already played out very well, but we see future further stacks providing greater runway for this theme, which is why we're still overweight in this exposure, and earnings are coming through. And looking ahead to 2024, tech is expected to carry more than 50% of the earnings growth for next year. So certainly this is different from the dot-com bubble. We do think that there is more runway, which is why we're still overweight. And as we think about the broader U.S. equity allocation, whilst we have a underweight to the overall benchmark, the overweight in AI and tech actually takes us close to neutral allocation. And on top of that, you consider the greater alpha opportunities, selective opportunities in this environment versus the period after global financial crisis, where central banks were taking out a lot of macro uncertainty with their forward guidance. Now the room for having differentiated view, the reward for that is greater, and the room for that is greater. So we certainly want to think about being more deliberate and selective as we think about investing in 2024.
Wei, you alluded to it just then. You're not exactly bulled up aggressively on US equity markets. Just geographically, is it time to look outside of America after a period again of absolute dominance and exceptionalism?
Well, with the overall close to neutral allocation to U.S. equity market, including the AI allocation and potential alpha selectivity opportunity, we also see opportunities outside of the U.S. exactly as you say. So if you think about Japan, for example, which is a country that we have liked for most part of this year, we upgraded twice through the course of 2023, but we think that this has more room to run, but we like it on a currency unhedged basis as we think about the prospect of exiting from yield curve control. We also like, well, emerging market is interesting, and increasingly we get questions around emerging market ex-China. So here we look at countries like Mexico, countries like India that are actually benefiting from the cross currents of some of the mega forces that we have identified, including aging population. They have younger population, including digitalization trend. But of course, in this market, valuation has run up. So we even want to be more selective within these exposures as well. But certainly, we want to think about pushing against the home bias tendency as we think about geographical as well diversification for 2024.